Morning, everybody, and welcome to the panel. My name is Miriam Ratkovicova. I'm a managing director with Deloitte, one of the partners and leaders in our AML and financial crime practice. And today I'm very excited to moderate the panel on current trends in AML, sanctions, and financial crime. And for those of you that have been monitoring the landscape, I'm sure you have noticed that, and I'm sure you would agree, that the volume and the speed of change that we have been experiencing in the space of regulations, new guidance, new rules in the past few months, especially the last 100 days in the US, has been unprecedented. And with a lot of change comes a lot of questions. And so we have assembled a very distinct and a very heterogeneous panel, hopefully bringing to you different point of views, different perspectives to answer some of those questions. Specifically, we have invited an examiner, a banker, and a technology provider. So I'm very excited to moderate this panel and hear their point of views, sometimes perhaps different point of views, and hopefully that will also encourage some questions from you in the audience. So feel free to submit those as we go through. So first of all, let me introduce you to the speakers. My first speaker, I promised you an examiner. Let me welcome Marlyen Habib. She's a compliance risk program lead at the Federal Reserve Bank of New York Supervision and Regulation. I believe this is our first time having a speaker from the Fed. Very excited. In her role, Marlyen is responsible for 150 firms across foreign banking organizations' portfolio. Specifically, Marlyen manages a team of examiners that assess compliance with BSA, AML, laws and regulations, requirements of OFAC, other counter-terrorist financing regulations, and complex enforcement actions. Next, let me welcome Bill Mendenhall. He's a co-founder and chief advisory officer at BankCheck. Bill has long experience in the space. He started as a bank rating analyst at Moody's, after which he started and led EMEA rating advisory team at Merrill Lynch for 12 years. Eventually, he then entered the fintech space and committed himself to building BankCheck, which is a payment and bank KYC global reference data platform that helps financial institutions reduce AML risk and meet their obligations. And last but not least, let me welcome the banker on the stage, Atul Sood. Atul is the global head of KYC and CDD, as well as ATE, anti-tax evasion, for Bank of New York. He brings more than 20 years of experience in the space, previously working for Citibank, also in the global KYC role. Prior to that, he spent several years in advisory and legal consulting on topics related to AML, OFAC, and FCPA. We have several topics prepared for you today, so let me just jump right in. The first topic is on the changing regulatory landscape. And as we were preparing for this panel, as I mentioned, given all of the executive orders and new administration priorities, new proposed rules, interim final rules, what we agreed is that we could be here for hours if we wanted to cover all of the changes in the past couple months. So instead, what I have decided to do is ask each of you to just pick one area which is mostly on top of your mind. And Atul, maybe I start with you.
Yeah, sure, absolutely.
From the banker's perspective.
Yeah, thank you. Thanks for the opportunity to join this panel. Top of mind for me right now is the program expectations for financial institutions related to export control evasion. Right, there's a lot of stuff going on with the EU AML package and things of that nature. But this is top of mind for me because it is it's a different exercise for financial institutions, right? So they're not required to comply with the export controls themselves, but we're being put in a position of being able to identify, potentially mitigate, and as well as report instances where we think our customers may be positioning themselves or actually acting to evade export controls, right? And so this is something we're working on at BNY, and I know our peer institutions are working on as well. But this is an entirely new type of program for us. And so that's really what's top of mind for me.
It's interesting that you mentioned that. Last year, actually, at the same conference, we had the global head of sanctions, I believe it was for BMO. He was talking about how this trend of export controls and sanctions kind of converging in the same, under the same fin crime umbrella.
And that actually is one of the difficulties, right? Where does it sit in your program?
Exactly.
It relates to sanctions, of course, but it very much is an AML program as well, right? Because the difference here is we're not, for sanctions, you're really screening to identify countries or entities or individuals that may be on a sanctions list. Here, we're not looking necessarily at our customers to determine if they're sanctioned, but rather looking at their behavior, what their business is, how they're transacting and acting globally to see if they potentially could be evading export controls and using, in my case, the bank to help facilitate that.
Wonderful. Bill, let me turn to you from a perspective of a technology provider. Which of the new changes, regulations are on top of your mind and your clients?
Thanks, Miriam. Yes, the top of my mind is that we are facing a big potential divergence in sanctions regimes. European nations have declared their commitment to maintaining maximum pressure on the Russian economy through sanctions, while the US administration is talking about a resumption in trade. So what happens if Europe and the US go in totally different directions? Now, there have been occasions when, first of all, what are the levers? OFAC actions are backed by the threat of withholding the right to use the US dollar. The EU can order entities to be disconnected from SWIFT's cross-border payments messaging system. In terms of the EU, just to drill down a bit, there is EU sanctions require unanimity among member states. And that is problematic, with Hungary being a distinct outlier when it comes to Russia policy. One way around this would be to impose sanctions at the national level instead, which would require us to monitor 25 or so country lists instead of one consolidated EU list. But things could get very messy indeed if Europeans start to apply sanctions on US companies doing business in Russia, assuming that US sanctions are lifted. Now, there's been long disagreement between Europe and the US over both Cuba and Iran. And the EU and the UK both have legislation to block the extraterritorial reach of US laws in their respective jurisdictions. Banks, of course, are caught somewhere right in the middle between sanctions and counter-sanctions. But the sanctions war over Russia could really take regulatory risk to an altogether different level.
Absolutely. I mean, this divergence of regulatory requirements and expectations on sanctions as well as other areas is definitely creating challenges for global financial institutions. And it is something we will come back to a little bit later on this panel. Marlyen, before I turn to you, maybe I tweak the question a little bit. So given all the new administration priorities, what changes, if any, should we expect in terms of AML examination focus areas?
Thank you. And before I even speak, and I hate to do this, my opinions are my own. They are not representative of the Federal Reserve Bank of New York, just so everybody knows. Okay. I think we as regulators are always trying to adjust our approach to match the environment. And so, contrary to popular belief, we do not just check boxes. We really try to adjust what we do to fit what is happening. And while we do have a bit of guidance, which we kind of call our Bible, it's the FFIEC manual, it's out there because we need it, so we know how to examine, and also so you as institutions know what to expect. So it's a bit of level setting, and we all kind of have to play by the same rules. But that said, we also understand that there are shifts in the environment and that things are happening. I know that you are both concerned, and they're both very legitimate concerns about export controls and sanctions, and we're going to have to adjust to that as well. But what I will say is that our exam process will probably not change that much. Even when the AML Act came out and it was talking about the FinCEN priorities, when you think about it, they were all things that you're already looking for anyway. Terrorist financing, narcotics trafficking, et cetera. And then even though the FCPA is on pause, when you look at the executive order in the FCPA, it talks about these national priorities, and it talks about narcotics trafficking, it talks about proliferation, it talks about these things that we always care about. Where's the risk? Just look out for the risk and pay attention to that. And when you look at the CTA, and even though now only domestics even though domestics and US entities do not have to register, nothing has really changed for the institutions anyway, because you still have to follow the CDD rule and collect the information. So as examiners, I think we're going to stay the course. I think we try to focus our exams on the risk profile of the institution and what's going on there. And so while there are things that are constantly changing, and we have our eye out and our ear out, and later today, we're actually meeting as a BSA team. All the reserves are meeting across the system, and we're going to talk about BSA trends and stuff. So we try to stay on top of stuff and try to adjust how we do things. But for now, stay the course, focus on your risk, focus on the things that you have been focusing on in all the years past. Nothing has really changed. And when it does, we will be sure to make sure that we're on top of it.
Wonderful. Let's now double click on some of the specific topics. And one of the things I would like to discuss is the 3 lines of defense and the roles and responsibilities and the evolution of the 3 lines of defense, especially the first line and second line. I'm not sure that we have anybody from internal audit in the audience, but we definitely have very good representation from the first and second line. Given the changes over the last several years in terms of who's responsible for what, Marlyen, maybe I start with you this time. Where do you see gaps amongst the understanding of the obligations between the first and second and third?
So first, I'd like to say that I think that most institutions are really doing a good job of making sure that everybody understands that risk is everybody's responsibility. And so I think that really has come a long way over the years. And from a culture and training perspectives, I think the banks have really risen to the occasion. There has been a recent trend where a lot of institutions are moving risk to the first line, so it could stay closer to where it's initiated. And then sometimes the work shifts to people who may have never really covered, say, anti-money laundering or sanctions, or didn't really understand it. And so there really needs to be training there so that these people who have never done this kind of job before, even though generally they understood, they had to look out for some things, really are better prepared to be the first line of defense. And then there's also the shift of, second line of defense folks to first line of defense. That doesn't change much. It happens organizationally. But when you do that, there still needs to be second line oversight over the first line. It cannot just be a move it and forget it kind of situation. The second line really has to be involved. And they really shouldn't operate in silos. There's business and compliance really need to stay in step with one another. Business shouldn't go to the table without compliance there, and compliance shouldn't go to the table without business there. It really is like kind of a very dynamic environment. And if both lines of defense work together, then it should work out well. Also, I think banks need to be mindful kind of where first line ends and second line begins. There's a small gap in there in the middle, but that's where sometimes things fall apart. So that's an area to pay attention as well.
Atul, any perspectives from?
Yeah, absolutely not. I agree with everything you said. And I think I want to talk a little bit about that gap. And I think you said the siloing, right? So the first line of defense, as you were saying, really owns execution risk, right? But the question here is about ownership of risk and overall accountability for that risk, right? And I think if you put it in simple terms, the first line executes, the second line sort of gives them a roadmap for execution, right? I think where the gap happens is there's a tendency for there to be siloing, right, in those respective roles. Sure, a second line will provide oversight and credible challenge, right? But what really needs to happen is accountability across the first and second line for their respective roles, right? So for first line, they have a roadmap, they may put some rules into place and then they execute them. But they can't do that mindlessly, right? They need to understand that that they have an obligation with respect to that roadmap and that compliance program to be aware of what the purpose of that program is, right? They can't just follow the rules slavishly. They need to understand what they're intended to do. And this also may involve check and challenge, right? And the second line has to have the appetite for that check and challenge. But ultimately, the second line needs to understand and work with the first line to achieve business objectives, right? Because it's not compliance for compliance sake. It's compliance so that you can execute a business in a responsible manner. So the second line needs to be flexible. They need to have a program that they re-review, right? And take feedback from the first line so that it actually operates as intended.
Marlyen, you've mentioned oversight a couple times. Can we talk a little bit about the governance and oversight from the top of the house perspective? I mean, we've seen in several of the recent public enforcement actions that came out in the last quarter of 2024, right? We've seen specific provisions on the role of the board, right? And specific call outs to the involvement of the board. Can you speak a little bit about that as well on top of those 3 lines of defense?
Sure. The board is really responsible for culture and accountability. And we're really looking for the boards to be involved, that they're staffed with seasoned individuals, the ones that can ask tough questions and really press for right answers. And I think that happens if you are staffed appropriately as a board. So, instead of being generalists, you may need more people with risk-specific knowledge. And they need to have, enough knowledge to understand the areas and to make these tough decisions. There could also be a need for independent board members. And they really should, and whenever there are board committees, the person who's leading that board committee should be focused on skill sets. You want to make sure that the board is involved. And to make sure that the board has the right information, management needs to work with them. And they need to provide them with the right metrics. And the metrics can't be so dense. It can't be a book of 50 pages. It needs to be something that's really easily digestible and understandable so they are able to know what's going on and able to make the right decisions. There should be a regular cadence of meetings where there's a regular flow of information as well. Lastly, I think the board needs the power, and I really hate to say this, but I think it's a bit of a carrot and stick situation where they need to evaluate management, assess compensation, and really incentivize management to be outcome driven. And I think once they kind of set that tone, people will take it more seriously because it needs to kind of happen. But the board's involvement is really important. They're not really just the top of the house or figureheads. They really should be involved.
Atul, given this emphasis on board involvement over the last few months, have you seen changes in financial organizations in how they report to the board, how they approach, how they involve the board?
I think so. I can tell you that we reevaluate on an ongoing basis the information we report to the board. And I think that really comes from the changes that we make or that we monitor for in the governance structure that sits on the board. I think that's very important. I think some of the things that I commonly see is governance structures that when you fit them together under the board don't actually make sense, right? It looks like you're covering off on all the areas and risks that you need to, but you're not really when you piece it together, there are gaps. And the other big thing that I really focus on is the metrics, right? The information that you're relaying to these governance structures. You really need to understand why you're sending that information to that governance structure and what you expect them to do with it, right? There's too much, like you were saying, tons of metrics. There's way too many metrics that are being sent for informational purposes. And so the audience for those metrics doesn't really know what to do and doesn't know what you want them to do, right? So you have governance structures that you send information to so that they can make a decision, they can accept risk and give you direction. But then there's other information you send to them so they can make a determination of whether it needs to rise higher up, right? And what they want the governance structures that sit above them and ultimately the board to see. And so it's very important that every metric, every piece of information you send through these governance structures, it has some purpose. What are you expecting them to do with it, right? Because now they're responsible for it. Are you expecting feedback on it? right? And then set your rules up around those metrics and when you send them accordingly, right? And so just any metric that's measuring program health, if you're going to have thresholds and you're going to breach them and send them, but you don't expect that governance structure to do anything with it, then your thresholds are wrong or your metric is wrong, right? And so that's how I kind of look at it, and that ultimately supports what goes to the board.
Makes sense. As the next topic, I would like us to focus and talk a little bit more about data and technology. I've already mentioned some of these recent public enforcement actions. For the first time in the AML space, we have seen specific provisions on data, lineage, data integrity, system integrity. Marlyen, from your point of view, what in your mind is critical in building strong AML data programs?
Everything is built on data, and I think that's the emphasis that you've seen. It's because, you know, any machine learning, any AI, any other technology, it all uses data. And so while data and technology can really move the needle and produce better results, they're only as good as the data that it ingests. So I think what happens is that firms often struggle because data isn't centralized, and you see it more with kind of these banks that have acquired other banks over time, and it's just constant systems feeding into other systems and feeding into the data pool, and it all gets very confusing. And solutions can be very expensive, and we get that, and you know, and it's time consuming. And then by the time banks realize how bad the situation is, it really takes a lot of time to like unravel everything. And so without good data and without good data lineage, are your systems really working? Are they detecting, you know, money laundering? Or are they detecting what they're supposed to? And that's, I think, been the emphasis on data. And so I think the idea is to do it right from the start. You acquire a system, document. I think people think about data and technology and stuff as really just being something that's happening through a machine, but it really has a big human aspect to it. And the human aspect is, you know, collecting the information, documenting, making sure you have a data library, a data dictionary, that it's clear enough that the next person can pick it up. And also, you need to hire the right people. This is complicated stuff in a lot of instances, and you really need these really deep subject matter experts that understand data. And then also perform regular testing and monitoring. And you could use, you know, that you could probably use something to help you with, but also document everything that's happening through your testing and monitoring, and make sure that everything is reconciling. And then lastly, I think, you know, what needs to happen is that you make sure that your stakeholders are aware of what data is, data lineage, the importance of it, because oftentimes it is people who can sometimes catch the errors if it's not being caught by the machine.
Bill, as a data provider, can you talk about the value of data and the opportunities that come with relying on technology data providers like yourself?
So use of the LEI, the legal entity identifier, will improve sanctions matching. It will improve the ability to automate KYC, and it will improve transaction monitoring. There is momentum building to make the LEI mandatory for payments messages. So far, India has made the LEI mandatory for larger transactions, and the LEI will become, or has become, a requirement in the UK domestic payment system, CHAPS. So there's a momentum building, and that will allow us to link in. So identifiers, that's the key word, like the LEI, can act like a kind of Rosetta Stone to unlock different pools of data and contribute to building a more comprehensive anti-money laundering solution.
Atul, can you comment a little bit on data and also on reliance on data providers? And
I think you guys covered mostly everything. You didn't leave much for me, but I think the one thing I would emphasize or I'm very focused on is, and a lot of this comes from doing the data lineage and data contracts and data quality, controls for data accuracy, but does the data actually say what you think or intended it to say? And is it really being received by downstream systems in the way, and are they being interpreted by those systems in the way that you think it is, right? And so this goes to your comment earlier about even expanding or acquiring another business. Over time, I found that data frameworks become a patchwork, right? And what you really need to make sure is that for any one given use case or purpose, right, that the data attributes that they're using them according to a set of rules that everyone is using consistently, or you have some mechanism to translate what they're doing if you can't make them consistent, right? So if you just take even the example of a customer for me, for BNY, if I define a customer as someone who has account, service, or product, that means that information, and my definition of customer now is relying on all of the account and product systems to send me data using attributes that I will interpret to say customer relationship, right? And if these account and product systems have different legacies, some are 20 years old, some are 10 years old, some are 5 years old, some we acquired, that's not going to always be the case. And so you have this not only to make sure when you acquire them that you do something at that point, right, to understand that the data that you're acquiring now, that does it speak to all the other data I have, but you have to have governance that goes beyond just data quality, but the actual rules around the data, like when you use certain data attributes, what they mean. You need to have governance over that, and you really need not just data SMEs, and I think you referenced this both, but you need SMEs in the underlying, in the subject that the data represents. You need customer SMEs, you need account product service SMEs, you need compliance that is defining what a customer is, for example. They need to be involved in the rules that you're setting for that data. They need to even be involved to the extent of your data quality controls, right? Because different data is important for different purposes, and some data is more important than others, right? And so they need to even be involved at that level.
In addition to data, can we talk a little bit more about the technology and use of AI, Gen AI? Earlier today, and I appreciate that you might not have seen all of the panels, but we had the head of AI strategy, Manuela from JP Morgan, talk about the importance of institutions getting involved with AI and Gen AI. We heard about the threats from the future leaders' presentations when it comes to these new technologies. Can you talk a little bit about opportunities? Atul, maybe you can start with that. Opportunities in using these latest technologies in the space of financial crime.
Yeah, so I would start at the outset by saying, when I'm looking at AI, like in the KYC or anti-tax evasion space, one of the things, and it sounds obvious, but you really need to understand the purpose of the particular AI you're looking at and how it's going to interact with your current framework, right? So, AI is, I think someone said earlier, the AI is only going to be as good as the data that you have underlying it and the rules that you have around that data, right? So just layering AI on something is not necessarily going to help and can probably compound problems that you have, right? But you really need to look at the purpose of the AI. AI that's more detective in nature, I think, is something that firms are moving forward with more quickly, because this is using artificial intelligence to look at your data and, for example, identify typologies. So transaction monitoring is a great place where you can use AI. It's almost like a more intelligent set of rules, for example, right? Then you have AI that you can actually use to collect information and populate it where you need it. And that's where it gets a little bit more risky in my view, right? You have to have very clear rules about what that AI is collecting for you and controls around whether it's collecting the information correctly if you're going to take the human element out of it, right? And I feel like, I don't know if you guys would agree, but the standard for AI is a lot higher than it is for a human. So, in an operation sense, humans make errors all the time, and there's an acceptable level of error. With AI, I feel like the tendency is to say that acceptable level of error is way smaller because there's not a human involved, right? So that's something I myself sort of struggle with, to say, well, hold on, I'm accepting a 5% error rate when a human does it. How come the AI has to be perfect, right? So I think to that piece, you just have to have controls around how you monitor the functioning of the AI, what's an acceptable level of risk, and then how that machine learning is going to close that gap for you, right?
Marlyen, any comments from the examiner's perspective? Like what types of rail guards would you expect financial institutions putting in place when entertaining with these new technologies?
I think Atul really set the stage for it, and I think it's everything that he said is very sound. I think what we need, there's guidance out there about models, and I actually think that guidance is pretty good. I can't cite the exact AD letter for you right now, but it's good guidance, and it kind of gives you a way to look at it. It's the way that you set it up. You make sure that there are controls, that the data going in is working as well, that there's model testing over time, model validation, all that stuff is important. It's not really that different for AI. You're kind of doing the same thing. The only thing with AI is, I know you're saying that we expect like 0 errors, but I think the concern is more about—
Not the regulator, I think internally.
Oh, okay.
No, my own tendency is
Okay.
there's no human, so this better be perfect, right? Like,
Yeah, so the trick there is, I think it's good to have, you can't set it and forget it. That's the kind of thing. And so when you set it and forget it and you assume that it's going to work and you don't adjust it over time or test it over time, that's like the real concern right there. So I think what needs to happen is it does need testing over time and it needs to be adjusted. The worst thing that can happen is that, you basically get a bad cocktail of bad data, and then the machine is making assumptions, and then it's all convoluted together, and it's producing some completely different result than you ever expected.
and then it's learning from that, and then.
Yes,
and
it's learning from that, it's compounding the issue. So extra caution, I think, when you're buying or AI tools, is that you're making sure you're buying one that works for you, and that you're tuning it the way that you need it to be tuned. It's the same thing with, detection monitoring systems, for example, for transaction monitoring. So it's all kind of the same thing. The extra level is if you outsource completely to a third party, more good guidance out there on third-party risk management, is that you make sure you really understand what, the third party is doing, and that there is oversight over them. And particularly, even though maybe we forget about this, when we talk about client data, because the last thing anybody wants is to have their client's data leaked. So it's just like certain levels. I would kind of visit the guidance. It's just making sure that you're setting it up correctly, testing, and making sure over time that it's operating as you want it to.
And the key thing, right, from I think you brought the model risk management, right? The key principle there, I think, is setting and documenting clear expectations for the performance of the AI and then monitoring against those expectations, right? I think that's one of the underlying goals of model risk management is having expected outcomes and then monitoring to see that whether you're achieving those outcomes or you need to make adjustments. I think it's the same thing for the AI. What are your expectations for its performance, for what it's trying to achieve, and how are you monitoring that?
Yeah, I also think one of the important comments that Manuel actually made on the panel earlier this morning is that while AI can help us identify fraud based on fraud activities that we have observed in the past, it can't really predict new types of fraud. So that constant learning, that needs to be provided to the AI is super important. Bill, actually, moving on to the next topic, Bill highlighted one of the key issues that we are all experiencing in the global financial industry space, which is the divergence in regulatory requirements and expectations across different jurisdictions. Marlyen, can you speak a little bit about how FRB coordinates its efforts with global regulators, perhaps local regulators, and even industry?
Yes. So we as a team in New York work with global regulators all the time. So in the intro, I manage foreign banks. And so we're constantly working with foreign regulators. We also work with state regulators a lot. And we have conversations with the OCC, the FDIC, et cetera, as it relates to whatever banks we're supervising. And we try to kind of share, what are they seeing on their end, because they're examining something slightly different than what we're examining, and we really have a conversation about it. We also do joint exams with foreign regulators. We
Marlyen, can you hear me?
are actually currently hosting, this is like conference time, I guess, because we're also hosting a central banker seminar where we
You can hear
invite
me
central
okay?
bankers from all over the world and they come to New York and, we present to them. So there's a lot of stuff always happening where
So
we're
let me
trying to
know if you can
engage
hear
with
me.
our foreign regulators and also with our fellow domestic regulators to really understand how a firm is performing and dividing and conquering and trying not to repeat the work that the other regulator is doing. And we try to leverage a bit. In terms of how we reach out to the industry, this is a great example. And not only just sitting on panels, but honestly attending panels, really getting a feel for what's going on out there and what banks are thinking. What are the new cutting things that we're talking about? We discussed a lot of BRICS stuff today, which was very interesting. We don't necessarily discuss that on a regular basis at the Fed, but it is something that is happening and we have to be aware of it. There is also, they have the equivalent of, the supervisory colleges where there are bilateral meetings and they will go meet with foreign regulators. And I know that it recently happened in Mexico and Canada. And also we, and not necessarily my team, but the New York Fed, we will go out to other jurisdictions. And so say we'll go to France and we'll meet with the ACPR and we'll meet with, any French banks there, and everybody is there kind of together working and talking and doing things like this and having conversations. So really just trying to stay on top of things and understand the pain points and then learn from other regulators and they can learn from us.
Atul, how can industry, how can banks, financial institutions contribute to establish meaningful regulatory regime?
Yeah, so I think obviously with proposed rulemaking, right, there's the comment period and the comments that you provide. Like BNY and other institutions, they all participate, and I think that's super critical. I think one thing I've noticed in that respect, and you and I were able to talk about it a little bit, which is fantastic, but often there's a tendency to send very big comment letters back that consolidate feedback from a wide variety of participants. And I think we probably could do a better job of really highlighting what's most important to us so it doesn't get really lost in a sea of comments, right? So if we send 30 pages back, we probably could do a better job of saying, hey, here are the most critical items we really want you to focus on. And then here's some other things. I think you mentioned meetings like this are important. I've already had an opportunity to talk to you a couple of times and slip some stuff in there. But I think feedback to your examiners, I try to do that, like when, under exam all the time and try to provide feedback there and work with them to make sure that we can rationalize the application of a new regulation to our circumstances. And I find that to be pretty effective.
Bill, let me change the question a little bit for you. In spite of all the efforts, I'm pretty sure there will always be some differences in the regulatory requirements and expectations across different jurisdictions. How can technology providers and BankCheck specifically help financial institutions in meeting the different requirements?
Yeah. So I'll just from our personal perspective, the two questions when we first engage with a prospective client, the two questions we get from their compliance team are: one, what is the source of your information? And two, how frequently is it updated?
Mm-hmm.
So for us, AI in combination with optical character recognition offers a really exciting opportunity to validate information like ownership structure, boards of directors, management. The thing is, this information can be taken directly from source documents like annual reports and stock exchange or regulatory filings. So the direct link is made and cross-referenced to the original source material. So I think this element can make a huge difference to the way we go about validating information around the control of an entity and keeping it current.
Great, because that's an excellent segue to the next topic, which is the timeliness and staying on top of the changes to the AML and financial crime agenda. Atul, how does your institution ensure that you are staying on top of all of these changes that are happening weekly, sometimes daily?
Yeah, so BNY has a centralized function that ingests pertinent changes across the world and essentially it's a framework that, based on the subject matter of the change, as it's perceived by this intake team, then disseminates this information to the right subject matter experts and the responsible parties, and then an assessment is done of whether an impact assessment is required. Is it relevant? Is it not? If not, why not? And this framework sits on top of what we call an LR, a laws, rules, and regulations mapping, which basically maps all of our regulatory requirements to the controls by which we meet them, and to the parties that are required to meet them, right? So once we've gone through this sort of exercise, it has a place where we can put it and continue to keep that updated.
You've mentioned LRRs. In addition to laws, rules, and regulations, how about public enforcement actions that are not even related to your organization, right? But they are out there. Very, very valuable information that you can gauge from those. How do you leverage those?
So it's a combination. So some of these go through that same process when they're obviously relevant. And then a lot of it is specific to the areas, right? So I work, for example, with my AML legal department very closely on enforcement actions and activity in that area. And they will review these things and then raise them to me where they think there may be anything that I can use from them. And they do that across the AML function. So they'll look at an enforcement action and they'll glean from that what might be relevant to transaction monitoring, what might be relevant to them, to audit, to KYC, to anti-tax evasion. And that's how we do it. And we do that globally.
Yeah, I mean, that's a great practice. And we see that from multiple financial institutions, right? They will literally pick up public enforcement actions and use it as a mock exam of their own program, right? To see, do any of these gaps, do any of these issues also apply to us if we were held to the same standard? And let's fix it before it becomes a bigger issue. So Bill, from your perspective, as as regulations are changing, expectations are changing, how do you pivot as a technology and data provider? Do you change your product? How do you make sure you are up to date?
Well, the best way for us to stay current is really to listen to our clients and respond. So a couple of examples. We've seen interest quite recently in nested or downstream relationships. So in response, we designed a page on the portal that tells you for a given financial counterparty, every country where they have an active respondent. There can be literally hundreds of downstream relationships. So we are building an automated KYC solution in partnership with the client to enable them to do the appropriate level of due diligence on this number.
So partnership with the client being the most important.
Another area that we're seeing interest in and we've responded to is on a non-bank financial institution information with a particular focus on high-risk categories like money service providers. So we've expanded our coverage of regulatory websites to include MSPs and PSPs, and therefore hope that by identifying high-risk institutions and providing up-to-date confirmation of regulatory status, that we will give those clients the data they need in order to manage risk.
Thank you. Marlyen, any final advice from examiner's perspective to make sure that we are all staying on top of the changing AML regime?
Super quickly, because I know we're out of time. We are all in this together. And so as things are adjusting, everybody has to adjust. And I think even if AML was to go away altogether, think about why you do this. You're really doing it to prevent money laundering. And so all that human trafficking that's happening, all the drug trafficking that's creating deaths in the United States through, overdoses on fentanyl and, all these other things that are just going on, and terrorist financing, and then families of victims suing banks over, being their family being involved in terrorist attacks. All of this stuff is happening, and I don't think that we should just ignore it, even if the laws become so loose. Don't think of the short-term profit and gain. Think of the long-term effect that this could have. And it's not even about, laws and regs. It's really about why we do this.
Thank you. So we are at the top of the hour. So just 3 more things I'm going to say. First of all, big thank you to our expert panel for coming and joining us today. I would also like to say thank you to Stephanie Wolf and Jailin Lee from the Planning Committee, who made sure that we are on point, organized, and have a wide array of questions for today's panel. And 3, if these topics are of interest to you, obviously we could only go so deep during this panel. But if you are interested in more AML sanctions, financial crime discussion, please join us this afternoon for the financial crime compliance workshop from 2 to 5. I believe we are back here, and we will double click on many of the topics we covered today. Thank you.